All right, everyone. Once again, welcome to today's episode. So today we are looking at volatility 75. We cannot see how the market has traded from this high to this low, and then it has reversed, and we are inside of this area. So this leg we are seeing here is actually a reversal leg. Okay, this leg we are seeing in here is actually a reversal leg. And what are we expecting? Hopefully, we are expecting that as price reverses into this area, into this fair value gap resting in here, we want to see price react inside of this fair value gap. If price fails to react or do a reversal form of um, or market seeing some form of reversal happening inside of this area, okay, then we are expecting that price would trade above it, hopefully trade into this other end of the fair value gap resting here. This particular fair value gap is actually um, taken from the 1 hour time frame, and we are on the 15 minutes time frame, expecting to see price react in these regions. Okay, so hopefully we are hoping that market trades into this fair value gap, and then I want to see a shift in structure happening inside of this fair value gap. And if it does, we will hopefully give an entry somewhere inside of this area, expecting price to rally down, sweep the lows in here, and continue down even further. So basically that is all that is happening on the market as we speak. For those of you who are not so used to my stuff, let me give you a clear picture of what I'm going to show you here. So this is for a time frame for you. This is the 1 hour time frame, okay? And on the 1 hour time frame, this is what happened a few days back. We saw market trade all the way inside of this 4 hour. This green line in here, this green shaded area is actually a 4 hour time frame, but it is basically a fair value gap, okay? And there was another overlapping fair value gap, which was this tiny gray line beneath it, okay? And when price traded into this fair value gap, we saw a rejection down, traded above it, and then traded down, wicked rejection into this particular other block in here, and then we had a breakdown further, shifting structure. So this low broke the structure right in here, and then if we have a structure shift, the necessary thing we want to see is for price to retrace. Okay, so we saw this retracement leg which didn't close above this high, making this retracement leg a valid retracement leg. So if you had caught a trade, you would have caught a trade above these highs, and then we want to ride the market down all the way to this area. When it breaks this low, trades back into this inverted fair value gap, because this is also another fair value gap. Okay, price trades into it. We saw another rejection. Price trades down all the way close below this low, and then we see a sharp rejection upwards. Okay, so for this high in here is a protected high, okay, because this was the high that was used to run this low. Okay, this was the high that was used to run this low. Now take note, if we are looking at the market moving from a certain high all the way down and seeing this retracement leg and seeing all this expansion leg downwards, we clearly want to say that, you see, this movement all the way in here is one particular leg, and then this movement also in here is also one particular leg. Okay, so this is a swing high, and then this one is also a swing low, and this one is a protected swing high, and then we have another low right in here. Okay, so what are we expecting? We could necessarily expect price to trade inside of this area, or come up all the way into this area, into this other block, and do whatever it wants to do, but we want to still see a rejection back downwards. Okay, because we are in a bearish market situation. Okay, so for those of you who are new to my channel, I would encourage that you always like the video and give it a thumbs up, because the more you watch the video, give it a thumbs up, it makes it much more easier. Okay, So yes, sorry for that break. So basically we have a protected high in here, and then we have another swing low in here. So this is a swing high and then a swing low. Now we're expecting price to trade into this fair value gap and want to see a rejection, but then we don't just say that okay, price traded into it and then quickly we take a trade. For instance, now let's go down to a smaller time frame. Hopefully maybe 5 minutes. Let's look at a 5 minute time frame. You can see how on the 5 minute we have pierced into that particular how do we call it? We have pierced into this particular fair value gap. Do you just take a trade now? No. What do? We hold on until we have a very perfect market structure shift. Okay, now watch how beautifully we have this accumulation in here. Does it play a role? Yes, it does play a role. What role does it play? What we are expecting is that this accumulation, okay, this accumulation phase that has happened in here, we want to see anything above it as a manipulation. Okay, we want to see anything above the accumulation phase in here as manipulation, and then we want to see a proper market structure shift, and then we want to engage the market. Okay, so hopefully you can even decide not to engage the market. What do you then do? You would want to wait, market structure shift, trades below this accumulation, and then you engage the market. Okay, so beautifully, that is one of the perfect ways to engage the market. Okay, we are expecting a lower prices. Yes, we have a fair value gap in here, but that doesn't mean just as someone price traded into the fair value gap and I just give it a short pull. No, it doesn't work that way. So for instance, even on the 1 minute time frame, let's go to the 1 minute time frame. Now beautifully, this 1 minute time frame. On the 1 minute time frame, you could see how price has traded into this fair value gap and we are seeing a rejection back down. Okay, until we have a perfect market structure shift, you are not supposed to engage the market. Just allow it to do, because it can still trade all the way. For instance, let's go back to the 5 minute time frame. Price can do all that you want to do inside of this area to give you a false alarm that look, I'm going to go now, like what it's doing now. You may think it's going to go down because it tapped into the fair value gap and all that. No, the market doesn't work that way. We're expecting that whatever situation it is, we want to see a proper market structure shift. And how is a proper market structure shift supposed to look like? Okay, now we take this. So for instance, as price has traded above this fair value gap or traded into this fair value gap, we want to see a leg like this. We want to see another leg happening this way. We want to see another leg going up this way. Okay, and then hopefully if we have another leg breaking this low, okay, this low, then we are certain that we are going to go down. Okay, and then what happens is if we break this structure and then we have a retracement into this area, and then we have a retracement into this fair value gap again, then we are more certain that okay, this is what's going to happen. And then we can rather look at taking this low and then running this we call it low resistance liquidity runs, okay, to take down all these swing lows right in here. They all contain sell stops, okay, they all contain sell stops. Right, then we'll take it down and then we trigger people's trade, and we are just running down all the way. Right, so as beautiful as that, nevertheless, another thing that you should also take into consideration is that another thing price can do is price can equally trade all the way into this, does this, and then continue higher. It doesn't break the structure and continues higher. So that will not guarantee that you should take the trade anywhere. So far as the structure has not shifted, you still do not have the go ahead to execute or take a trade. Okay. Hopefully we are certain that the market probably might go our direction, and we would enjoy the ride. Okay. So beautifully, this is what is transpiring on the market, and we want to see how best we can where's my 1 hour? All right, so beautifully we have our 1 hour. So which fair value gap was I considering? I was considering this particular fair value gap right in here. Okay, as beautiful as this was the fair value gap I was really considering. Then we see how price has just tapped into the fair value gap for the first time. If it creates a swing high, then we have a perfect scenario for a high to have been created now. So this is another 5 minute time frame. If it creates a swing high, we want to see a swing low created. Okay. So one of the things that most people always do not consider is when a market creates a swing high. Okay, when it creates a swing high, that's automatic. It's not automatic, It has to create a high and a low. For instance, there's a high in here, there's a low in here. There's a high in here, there's a low in here. So market really has to create what we call a swing high and a swing low, and then another swing high and a low to see that we have actually shifted course. Then we can engage the market. Okay. So currently we are still holding on to our peace and our patience in hope that this is the 10 minutes time frame, which I rarely, even use. Okay, because it doesn't really give me a very clear picture and all that. So let's go back to our 15 minutes time frame and our 5 minute time frame. Where is the 15 minutes? So one of the things you should always take into consideration is that when you get a picture on a 5 minute time frame, really do a second check on the 15 minutes time frame. Okay, so for instance, you can see how after consolidation we are not really getting any swing high in here, and market is just moving. Okay, it's just moving. You would always have a confluence between the 15 minutes time frame and the 5 minute time frame to give you even more clearer picture of what the market is trying to do. Okay, so always confirm with the 15 and the 5 minutes, especially when you're on a lower time frame seeking to seek reversals and all that and run the market. You really need to get proper confirmation from the 15 and the 5 minute time frame so that you are always not found wanting. Okay, so as beautiful as that, I wish I'd still be on the market till that forms so that we will be able to execute a trade. But then, if I don't get the opportunity to still sit behind the computer to watch that unfold, I'm sure we will definitely have some playback for you guys to watch. But then watch this. Have you seen this area all the way into this? Then this. Have you seen where the mean threshold of this particular candle is? I'm going to show you. So I'm going to delineate that with a line. Okay. So this is the mean threshold of this particular high and low. What are you trying to say? What's this coming from? Where is this high and low coming from? Now let's go down to our 4 hour time frame, and I'm going to show you where I got those lines from. Okay, or where I got those area that I have demarcated from. All right. So rather, it's the 1 hour. I was on the 1 hour time frame, right? Yeah, I was on the 1 hour time frame. Yeah. Okay. So let me quickly go down to the 1 hour time frame. I got my 1 hour time frame taken off my I'll get it sorted out later. Okay, so don't worry. So beautifully, this is the 1 hour time frame. All right. So on the 1 hour time frame, when we scroll to the left, okay, when we scroll to the left, can you see this right in here? This particular candle right in here. Okay, this particular bearish candle right in here, from the low of it to the high of it. Okay, this particular candle actually, sorry, where did I move this thing from? Anyway, so this particular candle actually dipped into this fair value gap, and then we saw a rejection up higher. Okay, so this particular candle which did this, we had a high in here, a low, and a high. What does this last down close candle represent? A high, a low, and a higher high. What does it represent? is a mitigation. Okay, so if we had a low, a high, and a lower low, sorry, a higher low, then this last up close candle in here becomes what? Our breaker. All right, so now beautifully, because we have already traded, so if you are looking at it on a bigger picture, because we already traded below this candle, so we had a high in here, a low in here, and a higher high in here. Sorry, this now becomes our breaker. Okay, so with this breaker, when price trades into the breaker, coupled with the fact that that particular area still is overlapped with this particular fair value gap, we want to see things happening inside of this area, and then we want to enjoy the markets from there. Okay, now let's go to we're on the 1 hour time frame, right? Let's go down to our 15 minutes so that we don't happen to miss any of the action that we want to see. Okay, beautifully. Now let's go down to the 5 minute time frame. Good. So on the 5 minute time frame, it still gives us the confirmation that look, we are trading past this fair value gap, and we are going to go higher. Okay, and mind you, just like I said, this consolidation in here represents that anything that's going above it is the manipulation phase. So price can be manipulated to a very distance and a very high end levels before we can clearly see. So inside of this area, anywhere we find our shift in structure, it is going to be more valid and more legitimate for us to really should give the market a shot. Okay, so we are on a 5 minute time frame to give us more confluence. Okay, I want to end the stream, and then I will be back hopefully when I find the setup for a clearer trade to be taken. Then I'll come back on live and then let you all be on board so that you can give it a shot, as I also give it a live shot for you to see. All right, so beautifully, I'll leave it here, and then I will see you very soon in our next live video coming up before the close of the day. All right, I have to do a few things, so I wish you all the best. Enjoy the